Okay, welcome everyone. We'll start lesson one. Today lesson will go through our LO1. A couple of you already know me. My name is Anjum Satha. If you have any questions, please drop me email anjum@ukversity.co.uk and I'll try my best to get back to you as soon as possible. So before starting our session, we'll go through what we're supposed to learn. So as we're starting financial accounting one, which is key focus will be double entry bookkeeping, and we'll go through the basic stuff, within it. And then, of course, financial accounting too will be more towards final accounts. So understand the regulatory framework. We'll discuss standards. We'll discuss SMEs, and in our discussion, we'll address, different types of ownership as well. Sole trader, partnership, limited companies. We'll go through assess importance of accurate, applying accounting concept. We'll discuss about qualities of financial statements, qualitative. That's our lesson one. Lesson two, be able to prepare interpret the statement of cash flow. We'll discuss about the statement of cash flow, three activities: operating, financing, investing, and that will be in our lesson two. Lesson three will be able to prepare the credit control policy, and which will go through how we can apply the credit control policy based on ratio analysis, based on the credit reference agency's role, and various other, will go through the legislation. Each lesson we have indicative content what we're supposed to learn. uh, Explain, assess, purpose of accounting standard IAS 1, International Accounting Standard 1, all about, to be harmonized system, standardized system. IAS 1 is about prepare and present, financial statement, four types of financial statement we prepare, and it need to be true and fair information, and not like Enron or World Telecom or Trillion Construction Company. We had a lot of issues, creative accounting and all. To reduce it, that's the reason. We have an international financial reporting standards. International Accounting Standard Board role will go through prudence always, need to be whatever we're saying, we can prove in a consistencies in account, and going concern mean the company will carry on running as a normal for at least 1 year when we prepare. Materiality is mean all the significant information matching our accrual concept each year's income and expenses should be recorded, and the money measurement should be in term of not future accounting like Enron used to do. Realization of assets, we have a standard for as well. Accounting principle always relevant, reliable, comparable, understandable. These are all the qualities of financial statement. All the relevant information, all reliable, comparability at least to understandability need to be these, statements should increase. Those people have a basic accounting knowledge. That's, they can understand the facts and figures. Okay, that's, each lesson will go through one LO. So today our focus will be our LO1, which is learning outcome one. Okay, we'll start. Welcome everyone. So today lesson is LO1. Understand the regulatory framework, the aim of this unit, which is indicative content, which I just mentioned. And the aim is to really develop the basic understanding about the financial reporting skills and how we can manage SME, small, medium enterprise, and how we can prepare and present, their financial statement in the book of accounts. And financial accounting, of course, we need to look around financial accounting introduce, student the fundamental preparing the financial account, the regulatory framework around the financial statement and qualitative characteristic. Use of the financial information is look, practically from the recording of the single financial transaction through the preparation of the financial statement. So we can look around how we can prepare financial statement. Of course, we do the recording transaction. We prepare the trial balance from the ledgers. From the trial balance, if you're a bookkeeper, normally we're working toward the trial balance. As accountant, from the trial balance, we can prepare financial statements. So that is quite crucial. Accounting means recording the business transaction in a systematically where we can, and qualities of the financial statement and standard really need to be true and fair information. That's, the key purpose of financial accounting, of course, is external. We follow the accounting standard. Every year we prepare the financial statement, and that should be timely prepared within 12 months. All the business and accrual basis matching concept, all the transaction doesn't matter. We don't do cash accounting. We do the accrual accounting. Whatever the income and expense with the related IES should be recorded in the financial statements. It's provide the technical skill of double entry. So when we do the double entry, we can use the word debt click. So I can write the word for you. So just for the demonstrate. So we can use the word debt and click. So what is D? D is the debit. E is expenses. A is asset. Can you see all? Okay, so assets and D is the drawing. Whenever D increase, when we do debit. When decrease, opposite debit is a credit. When we need to reduce our expenses, we do credit. Otherwise, we do debit. Click. C is a credit. L is a liability. I is income. And C is a capital. We do credit. When we do credit, when increase, so opposite of increase is a decrease. So when decrease, you do debit. So like if income decrease, we have to do debit because normally income is increase mean is a credit. So please don't mix it with the bank account because the bank account is a liability for the bank. That's why the bank statement do credit. Yes, and we do in the passbook, cash book, we do debit. Bank do credit and we do debit. So that's a double entry bookkeeping. So please, which I can send you separate handouts if you're really keen to do practice about, but you all working in accounts and you know the double entry bookkeeping already. Okay, so that's why I'm not really going more in detail, but if you have a question, feel free, always ask. Okay, so we can look around financial statement. This tell about the business capital, how much investment, a good accountant, good internal control system need to be put in place. How does the financial accounting? Of course, double entry, we record the transaction. We have accounting equation like, asset should be under asset. Asset mean anything you own it, which will flow the future economics benefit is your asset. The liability is a legal obligation by law. You have to. Sometimes we have moral liabilities, but moral liabilities we don't do. But we need to be look around these. So we look around the accounting equation. Liability is a legal obligation which we need to be look around. So fundamental. These are the statement we can prepare income statement. So we can look around three statement according to IES statement of comprehensive income, also known as income statement, statement of financial position, also known as balance sheet, statement of cash flow, and statement of equity. These are the four statements we prepare. And as mentioned, double entry bookkeeping, we do debit and credit, and that will help, to record the transaction. And we do debit, and the credit in, and then we can prepare final accounts from. So an accounting is merely the way of classifying different transaction in asset and liabilities. In equity, equity mean, of course, is the investment. In companies, we use the word equity, which means shares, but normally we use the word is the capital. Revenue also known as sales turnover. It's basically total worth of the sale. The cost is how much cost you for the period of time. We record all. So we can look around the accounting equation. Asset goes on the debit side, liability goes on the credit side, and equity goes on the credit side. So all assets should be equal to liabilities and equity. And when we have asset minus liability, we have a net asset. So if you know net asset figures, it means you know your equity figures. So that's really we need to look around. So what is the balance sheet? Balance sheet, of course, is the historical figures which we can look around the asset, liabilities, and equities. We can look around liabilities and equities in the balance sheet. And if you want to, so we'll go through the ratio analysis and we can find, where these are and how the companies perform and the financial position of the company. also, which if you want to look around, so it's good to be find the financial position of the company. So purpose of the financial statement, as we mentioned earlier, this need to be true and fair. It's help you to measure the performance. If you want to look around the income and expense of the company and the profit for the company for certain period of time, every year profit and loss we prepare from the scratch. But financial position is a historical figure that carry on moving what did in the past, as they were and how much is addition, or the asset value went up or down. That's we need to be look around. Yes. So we can look around the revenue, we can look around the cost and profit and loss. So financial accounting, in the nutshell, financial statement help the company to assess several aspects of the business, from profitability and how the asset are sourced, cash flows, inflows and outflow. The financial statement, the mandatory for the tax purposes as well, and various stakeholders use these statements. So then we have assessment criteria 1.1, because our assignment task will be divided accordingly when we'll do the assignment discussion in last lesson. Explain, the role of accounting, which is mean in analyzing, monitoring, and control of the business performance. So we can look on the purpose of accounting is to communicate reports and financial information, financial position about the cash flows, and manage the financial accounting is concerned with the production of the financial statement, user of financial statement, directed are the steward. They should work in the best interest of the shareholders in the public limited company, because they're not investors, they're not conflicting interest. Okay, so investors need to be choose the company where they want to invest based on they can compare the statement according to the financial reporting standard, help to reduce the differences, and there is a easy to comparison, and we follow the qualities of financial statement. IS1, as mentioned, it's about the preparation. So difference between management accounting and financial accounting. So management is the internal and financial accounting is external. Management accounting don't follow the rules. There is no legal requirement you prepare the management account. It's you look the needs of the business, we need to be prepared. You can prepare whenever you need it, but financial accounts we should prepare within 12 months. So financial and non-financial information can be in the management account, but no, mostly financial information in the financial accounts. The nature of the information, and mostly financial, we mentioned time is a historical, forward looking, but many it's normally is mainly focused in the historical figure in the financial statement. There is no legal requirement to do the management account, but we follow the standard under the financial account, but not under the management account. Regulatory framework is the financial statement mean the law, regulation, and discrete policies official. They develop approved by the government and regulate, financial statement prepared for the entities in the organization, recording the transaction, summarizing the transaction, preparing the financial statement, and following the standards. So we can look around the UK accounting standards we have international accounting standard. If the company is only registered in the UK, of course, we can follow the UK standard, but normally nowadays, international and UK standard embedded in a way. So it's not a big difference, but it's good to be look around more international standard if the company is working throughout the world. So financial reporting standards, if I put IFRS, it's become International Financial Accounting Standard, financial reporting standard for entities. We can look around the statement of standard accounting practices. So these are the previous, general accounting practices which we can look around. We have a accounting standard committee, they pass, and we have a accounting standard board and then, these carry on becoming the rules and we carry on following them because it helps you to standardize the thing. So accounting standard committee, the specialist standard, particularly industries and sector, as far as financial reporting council we look, and prepare these standards. And that's, the which we need to be, that will help, properly. We have different charity commission. We can look around the company house and Company Act 2006, charities, we look at Charity Act 2011, Charity Commission, we need to publish the account. Generally acceptable accounting practices, which is GAAPs, we carry on following these standards as well. GAP 1, GAP 2, it's in term of use, describe the rules and generally acceptable, applicable to accounting practices and laid down by the standard and legislation that will help, to develop the accounting profession. And 1.2, any question until now, please? So for this, if you want to explore more, so we can look around IES-1. IES-1 is called International Accounting Standard 1, is about the financial statement, how to prepare and present every 12 months we need to, and these need to be true and fit. Then we have 1.2 in the conceptual and the regulatory framework in the financial reporting SMEs. SMEs is stand for, as we know, the small medium enterprise. We know the 50 employees, turnovers, and all. This we need to be less than 50 employees, turnover less than millions, and we can look around these. So accounting standard is the set rules which is prescribed. The method which we use, prepare and present. There are the issues with nationally and internationally bodies of accounting, which we need to be looking at the following. True and fair, that's the key, the not conflicting information, not biased information. And what we say, the material information should be presented. The objective of the financial reporting is to provide the financial information that is use the existing and the potential investor, lenders, and other creditors, making decision about providing, the resources to entities and decision made, the users and involve the investment, financial decision, and voting on the financial management. So we can look around the following are the regulatory arms of the accounting profession. We have a national law where we can look at every country have the national law that the regulatory framework. We can look around the UK, its own financial reporting. We have international reporting. We have international accounting standard board that give, so we can we have the standard international financial reporting standards 16, 15, and IS 17, because these are because in the past the lease is not used to be clustered and present. Now we need to be any lease, doesn't matter the financial operating lease, we need to be, it should be represent the financial statement and provide true and fair information. So international financial reporting and standard and International Accounting Standard Board, IFRS is, foundation is the independent non-profit organization. Is the primary objective to set up the constitution to develop and the public interest need to be, because a lot of creative accounting and to reduce the creative accounting, we need to follow the standards. And according to the foundation of their mission statement, IFRS standard to bring the transparencies, accountabilities, efficiencies to the financial market around the world. Yes, that's the key which we can look around international accounting standard boards. We have new financial accounting reporting standard, and we have SACs. We can look around advisory international accounting standards. We can look around SAPs. Yes, for accounting for the government grants, we can look around accounting for the value added tax. We can look around stock, long-term security. We can look around accounting for investment. We can look around foreign currency. We can look around the accounting for leases under the SAP. So these are the SAP standards. Then we have IFRS, financial reporting standard. We can look on an IFRS 1, cash flow statement. We can look on 2, accounting. Okay, so IS-7 is the statement, international accounting statement for statement of financial position. Sorry, statement of the cash flow, but IFR is the reporting point of view of how we can. So these are different standards we can look around when we need to be, so we can explore these. Okay, then we can look the number of, yes, FRS 16, 17, local as well IFRS. We can look around the needs of the regulation are, of course, reliable, sufficient. People have a trust on accounting is used starting point to calculating the tax, which we can annual reports, and accounts within the main document. Of course, nowadays is becoming compulsory for the company, not only give the financial information, but look around the CSR, sustainability reportings as well, financial and non-financial as well. That's we need to be explored. Okay, then we have 1.3, review the accounting concept, and when the preparing the financial statement, there are the 4. The size of the companies considered in preparing under the Company Act, the companies and the micro entities which we have the following. The turnover is 632 or less. We look at the 316,000 or less, in the balance sheet. As said, 10 employees or less, so we can say the micro entities. Small, medium, which we can look around further as well. 2 of the following turnover is 10.2 million. 5.1 million or less balance sheet and 50 employees or less, that's come under small, medium, not micro, small, medium enterprise. We can look around the mid-side businesses, which we can look around the medium size. It's the turnover less than 25 million, employees less than 250, and the gross asset is less than 12 point. Large organization, 36 million or more turnover, balance sheet, and of course the levies nowadays, apprentices and all, which we can look around for the rules. Small, medium enterprise turnover, medium size, we can look around, and large and micro is of course, less than 10 employees. So the balance sheet, of course, which is 3.26 million, 12.9 million, and 12.9 million are greater than that or less than that. So we can look around these. Implies 50, 250, and 250 greater than 250. International financial reporting, due to the increasing global nature of the investment in the business operations, we can look around internationalization, and we need to be more follow the international accounting standard, international financial reporting standard if we have within the EU and all, because that's because the companies have like think about Unilever, think about Procter and Gamble, think about Next, think about Nestle, think about these are the companies, they are following these standards. So we can look around international accounting standard board, independent accounting standard body, which is IFRS Foundation and international standard, founded in April 2000, successively International Accounting Standard Committee. They look around the bills and then they pass, and to make the standard to address, because we can. So user of financial statement can be many customer, lenders, HMRC, government agencies, and all. Anyone who has any interest can be a user of the financial statement. They need to be used for these users. They need to be comparable. They need to be provided, the least some basic information. They need the user to understand confident and financial statement, and we need to be look around the regulate the behaviors of the companies and towards their invest. So other accounting concept, we can look around the going concern. The business will carry on normal at least next 12 months. Accrual and matching all the income and expenses should be recorded in the year, not based on the cash. Consistency, we need to be consistent in accounting standard, not carry on changing the period of the financial statement. It should be every year, 12 months. And if you change things at the costing methods, like, activity-based costing or whichever, so we need to be make sure reinstate with the previous. So because we have a consistency, a materiality, all the significant information should be material transaction included. If anything, substantial our form, so economic substance of the transaction should be recorded, because it can be a legal form, and non-current asset acquired under the hire purchase agreements and all should be clearly, and prudence, is mean estimate under the condition. It should be true, fair, and neutral. All the information we can prove it as well. It should be owned by controlled by it with the asset with like future economic benefit, not a contingent asset. If we have the contingent asset, it should be use the standard power, which will go through IS 636 and all 37 and various other standard 38. So I am, which is the merit criteria, applying the accurate accounting concept, and we can look around the different accounting concept, like we discuss about a regulatory framework. International Accounting Standard Board produced the accounting standard. We have an International Accounting Committee. We have Financial Reporting Committee. Yes, so these carry on council. We have conceptual framework. Yes, we have these concept going concern, accrual, consistency, materiality, these, and we have the qualities of the financial statement. It need to be relevant, reliable, comparable, understandable information. It includes the advantages, all the transactions. So which we can look around these, so that's we need to be look around these very crucial, because that help, to reduce, the transactions, and we need to be all true and fair information. Other qualitative characteristic, which is an enhanced one, we can look around. These are relevant to need to be user assist, evaluating the performance. Reliable, can be relied upon, and free from the material and free from and need to be reliable, neutral, complete, and prudence. Comparable, we need at least 2 years. We understandable must be present in the form the user can understand. Different interested party, of course, stock exchange, investors and all, they look, the qualitative characteristic, which we can relevance and timeline. Information within 90 days of the year end should be published, understandable, complete information need to be all the assets and liabilities and all, not really give less, there shouldn't be any conflicted information. There should be reliable, which we say true and fair. The information should be a neutral and prudence, neutrally required. The information are the free deliberately errors, systematic errors, and these need to be designed and should be presented. Okay, so then we have these, please. You can look around the financial accounting is the focus on the financial statement. Uh, Financial accounting is external corporation. Those who stock is publicly traded must be financial statement. And we can look around the audited requirement as well. We have a general accepted accounting principle, double entry bookkeeping. Every transaction have account for the credit and one side will be debit. We can look around accounting equation, assets plus liabilities. Asset is equal to liabilities plus equities. Debit credit should be equal to, and the profitability of the company specific for the period is recorded in the statement, income statement, and the main component of the income statement. Yes, of course, we can look around the sales, the expenses, gains, losses, or it shows in the statement if you have, and that's the key. So today lesson was the key focus. We discussed about what is meant by transaction, double entry, that click I mentioned. You did think about debit and credit. We can prepare the statement, four types of financial statement: statement of comprehensive income, statement of financial position, statement of cash flow, and statement of change in equity, which is shareholder statement. And these are the crucial which we need to look around. And then we discuss about the qualities of financial statement: relevant, comparabilities, understandabilities, and timeline. And then we mention, in uh, accounting concept, which we can look around accrual basis, prudence, and all, so going concern, these should be, and we need to be address the materiality. All the information should be true and fair. So that was the key in our lesson. Any question, please, if you have, Eman? Okay, so please, if you have question, you can ask. The resources available, lesson recording will be available at the end of the lessons, especially from back office people upload on Monday, so it will be available. So please, if you're not on the Moodle, so you can request to admin. They can set up Moodle account for you. You've been given the books here as well, and I can send you separate books as well. But if you have other resources, like you want to look around IAS-1, and next to that, if you type the word Kaplan, Kaplan is a publisher, you can find the chapter of the book. Yes. So like a Kaplan resource bank, any topic like, yeah. Or if you're looking the statements, you're looking the qualities of financial statements. So you can further read as well. Yep. We can look around qualitative. Yes, so characteristics of financial statements or conceptual framework. Yeah, we can look around in Kaplan. So you can find it in all the, through Kaplan as well. Kaplan is the resource thing, and that will help you to find the chapter of the book, which is published by the Kaplan. So like you will see here, so it's good to be pleased. You can look around these resources and these, are most of the slide being, and we embedded these resources in our lessons as well. So like you will see here, and then you can find the characteristic of financial statement like they've been discussed. Okay, so that's all from my end, and hope I will speak to you during our next lesson next week on financial accounting 1. And in between, if you have any questions, drop me email anjum@ukeversity.co.uk. Thanks for attending today's session. Hope we'll speak to you next week. And thank you.